Hello, in this presentation we will record the transaction related to payroll into our bookkeeping problem in Excel, always keeping in mind how that same transaction might be entered into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to start off with a quick view of how it might be input into accounting software such as QuickBooks. Then we'll jump over to our accounting worksheet and enter the journal entry into the accounting worksheet. If we were to see something like QuickBooks, this is QuickBooks homepage. The employees section is down here, and in essence we are going to choose this item to pay employees. It's important to note that payroll is fairly complex, and there's at least 3 different paid tiers and options you can have within QuickBooks, and there's also a free version that you can work with within QuickBooks. And you can also have payroll if it's significant, meaning you have over a certain level of employees or a certain level of complexity, meaning possibly multiple states or just things you're dealing with within payroll that you have to deal with through payroll. It might be worthwhile to have an external company doing the payroll outside of your normal bookkeeping process. Even if you do that, however, you're still going to have to implement that information into the bookkeeping process with at least a journal entry or somehow automate that process. So it's good to know what we're doing in payroll no matter what type of system we are using. The systems in an account such as QuickBooks will automate certain things, meaning the free version will make you calculate, in a sense, the payroll taxes. We'll take a look at that. That's actually good practice just to know what the system's actually doing. And the more advanced versions will give you more options, like they'll calculate those taxes for free, the federal tax, the state taxes, and then generate financial statements, the ending statements, the 940s and the 941s being the U.S. payroll tax information, and then the states have different payroll tax information. So it just depends on the location, on all the complexities in payroll taxes. But the general idea is in essence the same, and if we know how the calculation works, then we can apply that general idea to whatever the tax rates are and whatever tax system is being used on the payroll. So we're going to have 2 employees. The first one's going to be Adam Hamilton. If we go into the QuickBooks system, no matter which one we're using, no matter if we use the free version or any of the paid versions, if we go into the detail in the payroll, it's going to look like this for any particular employee. And in this case, we have a salaried employee, so we got monthly pay. The time period is going to be January 1st to January 31st, so we're paying monthly. That's going to be the salary per month, so we just take the yearly salary divided by 12, and that would be the monthly salary. And you would think the easiest thing to do, if there was no, regulations or anything, we would just say we would pay and write a check decreasing cash for that amount, and we would debit wages expense, and that would be it. That would be a nice, easy transaction. However, we here have to deal with withholdings. And those are going to be down here. So these are going to be the withholdings that we take from the employee. It's important to understand what this means when we talk about these withholdings, because we're going to say that there are payroll taxes and that there are withholdings, and then we're going to have employer portions of payroll taxes. So when we record this journal entry, we want to understand what we're doing. So first of all, we're not going to deal with the state taxes here. We're only going to deal with the federal taxes. The same concepts will be applied to the states. The reason we won't deal with the states is because they're different, and other countries will have, it's all the same types of taxes. Once we get the tax type down, then we need to know the rate, and we can calculate what's going on here. So we'll concentrate on the federal taxes, which is a little bit more broad, and then just we'll apply the same rules to whatever area we are in. So in essence, we've got the gross pay here, and the Fed basically says that the employee is responsible for paying taxes. So the employee needs to pay their own taxes for, in our case, federal employment tax, Social Security, and Medicare. However, the employer has the responsibility of making them pay that taxes by taking it directly out of their paycheck. So it's really, you can think of it as the employee's responsibility, but the employer is being forced to be like the parental figure there, or like the enforcement figure to force that responsibility to be done when we think about these taxes that are being taken out of the paycheck. So we have, in essence, the salary here, and then we're going to take out the federal income tax. It's the normal tax that not the employer pays, not the company, but the employee. And then we also have Social Security and Medicare, and these are going to be 2 different types of taxes. They're taxed at a different rate. We'll talk about the rate a little bit in a little bit. But in essence, they're just going to be different taxes that the Fed is supposed to put in a different area to pay for different things, social programs such as Social Security and Medicare. So those are the responsibility of the employee to pay, but again, the employer has the responsibility of forcing them to do that by taking it out of their check directly. So this is going to be the pay, this is the net check. Now, it's important to note that there could be a lot of other things that we pull out that could be good things and voluntary things like a 401k plan, insurance we might have. Those are going to be options that the employee could have for benefits that we're going to say, hey, we'll take it out, but we're not going to force you to take it out. We'll give you the option of being part of this these benefits, and if you want them, then we'll take them out of your check and you won't even have to deal with it. So those are the employee options, and they act much the same. The state would be much the same as these, meaning the state would, force the employer to take out state taxes to make sure that the employees are paying some form of state taxes. Okay, and then we have the employer side over here. So these are taxes that the employer pays in addition to the employee taxes, which is a bit unusual because usually we think of paying taxes on the wages that we earn. These are taxes that the employer are actually paying on what the wages earned of the employee. Or in other words, they're paying these taxes on one of their expenses, on wages expense. And you can think of it, it's kind of set up kind of like a 401k plan where you have a matching type of principle. The idea being that these are going into social welfare programs, Social Security and Medicare, and for the employee kind of, and the employer is going to basically match those. So these two are not being pulled out of the check, but being paid by the employer. So we'll take a look at that in our Excel system as well. We have another employee, Erica, hourly employee, $20 an hour, worked 40 hours, that's $800. Same system. We're going to take out the federal income tax, Social Security, and Medicare. We'll talk about the calculations in Excel a little bit more. And that'll give us the net check. So she's actually going to get $630, although earning $800. Then we're going to pay on top of that another $49 for Social Security and another $11 for Medicare on the employer side. So let's take a look at how this might look in Excel. So we'll do the same calculation here in Excel. If we were just going to do this all by hand, we'd have to basically make a worksheet to calculate these wages and then write the check to them based on the gross pay. And we'll talk a bit about this. It'll be a little bit simplified, but we'll get the concept of it here. And so we're going to make a check. We're basically writing payroll. And in essence, payroll, in its most simplistic form, we're going to write it for the month as of January 31st for the month ended then, starting January 1st, ending January 31st for the first month of operations to these two employees. Now, if there wasn't any regulation, it would be the easiest, it'd be a really normal journal entry, really easy journal entry, just like paying the utility bill. We would say that is cash affected? We're going to say, yeah, cash is affected. It's going down because we are paying the cash. So that's a debit, and we're going to do the opposite thing to it and credit it. So we would copy that, scroll down, and that would be on the credit side. So I'd put it on the bottom. Now, because there is some more complexity, I'm going to put it down here. I'm going to skip 2 lines, and I'm going to put it down here on Q31. Q31, right click and paste 1, 2, 3. And then we'd say, well, what's the other side of it? We're paying wages. And the wages, some people get a little mixed up because we're typically used to earning wages, so we see it as revenue when we hear wages typically. But this is the employer paying the wages, and that means that they're using the wage earnings in order to help generate revenue. It's an expense. So it would be a wages expense down here, some type of wages or payroll expense of some kind. QuickBooks typically will use the term payroll expense. So we're going to take that. That's an expense just like anything else. So we're going to copy that and we're going to debit it. So we'll copy the expense as we do all the time with expenses and put that on top in Q29, right click and paste 1, 2, 3. So once we get the amounts, you would think that would be the journal entry. But then of course we have to deal with the fact that we have to withhold. And normally remember that if this was an employee's payroll and we think about normal US tax, we'd say, well, the employee is responsible for paying their own Social Security, Medicare, and federal income tax. That's their responsibility. They do a 1040 at the end of the year and are responsible for paying their own taxes. But note that what really is happening here, most people's pay, if you're a normal payroll for get a W-2 wage, there's been pressure, all the pressure is put on the responsibilities put on the employer to pull that money out. They have to. They've got to pull the money out. So it's not really, although it's being taken from the employee's wages, the employer is responsible for doing the calculation and going through the diligence of making sure that the withholding's happening. In other words, even though the employee's paying it, they never see the money because the employer is forced to take it out. So that's going to complicate things a bit in our terms of calculations. A lot more difficult than just paying the utility bill when we pay the payroll bill. We got to calculate these withholdings. So let's talk about what that will be. In order to do that, we'll go through our worksheet. So I'm going to scroll all the way to the top. We're going to freeze the panes. We're going to go to the View tab. We're on cell AJ1, View tab. And we will go to the Windows group and freeze panes. Freeze panes. And we'll do just a quick worksheet on this and see how this might look if we were to do this by hand, just in Excel. Scrolling all the way to the right till we get to a worksheet for payroll so that we can see this stuff side by side. And we're going to have our two employees here. So this is going to be a kind of a payroll register. It's going to be a pretty, just a simplified payroll register. And we're just going to list our two employees and we're going to put the information that we have. And note that then we can just kind of put this information into one journal entry instead of having a separate journal entry for each employee. And we can back it up with a payroll register here. So what we're going to say is we're going to say that Hamilton earned $4,583. We're going to say that's the salaried wages. In an actual payroll register, we might include the marital status and the number of exemptions to help us calculate the income tax, but we're just going to simplify things here. And then we're going to have the Social Security. So these are going to be the things that we're going to pull away from the wages in order to get to the net pay that we're going to pay to them. Now, the Social Security and Medicare, or Social Security, let's start with, is part of the FICA. Social Security and Medicare are both FICA taxes for the U.S. And these taxes are actually going to be easier to calculate typically because they're what we call more of a flat tax, meaning they have just a flat rate. So it's not like we have a different rate for tiers or progressive tax. It's really easy to calculate. We just take this number and multiply it times a flat rate. And it's usually 6.2%, I believe, around right now. But I'm just going to use the number that we put into Excel, which isn't exact. So the numbers aren't exact. We just get the concept down. And that is that we are going to reduce the Social Security. And again, once you know something is a flat tax and it's based on the wages, then you can apply the same principle. The tax rate isn't the issue here. With the tax rate's easy to calculate if it's a flat tax, but the issue is how to do it. So the tax rates will change, but in essence, if it was a flat tax, we would take this times whatever the tax rate, 6.2%. I'm just going to put the number here, and that's going to be 258, which is not 6.2%, but that's what we're going to use in our problem. And then we have the Medicare, which again is typically kind of a flat tax. There's some deviations, there's a cap to it, and things like that. We won't get into all the nature of payroll here, but just note that in essence, it's a fairly easy calculation. We take the total wages times the tax, which is, I think it's 0.0145 or 1.45%, 0.0145. But again, I'm just going to put the number here, which is going to be 66, which may not be exactly that calculation, but just keep that in mind. And then we're going to have the income tax, which could be the federal income tax, sometimes called the FIT. And this is normally what normal people think when they think of taxes, when they think of income taxes, because this is what we file our 1040 for at the end of the year, what we filed our individual tax return for at the end of the year. It has to do with the income taxes, and this is what is withheld for those income taxes that will then determine whether or not we get a refund or not at the end of the year when we file our income tax 1040. And so this one is the most complicated of calculations. And when they talk about complexity in the calculations, this is where it's at typically because it's not a flat tax. It's got a progressive rate, and it takes into account marital status as well as a number of exemptions like children. So in order to do that, we have to use a table, and we either have to use a table or some kind of software to do that calculation. Again, this isn't a payroll class. I won't get into the calculations. Just note that you'd need a marital status, you would need the number of exemptions, and you would need then at least a table or software to basically calculate these taxes, you'd also need to know how often you pay, which in this case is monthly. The other payroll periods could be weekly, it could be semi-annual or semi-monthly, or it could be bi-weekly. So those are the things you'd need to know in order to calculate this. We're just going to take the number here of 720, and that's what we're going to use. So now we're going to get the net pay. The net pay is simply just going to be this number, the gross pay, what they actually earned, minus what we took out of their check. So we're going to do a calculation. We're in DM6. We're going to say that equals point to the 4,583 minus point to the 258 minus point to the 66 minus point to the 720 and enter. So in essence, if we were to do that in a calculator, obviously what we did was just take the 4583 minus the 258 minus 66 minus 720, and there is the net check. So this is what we would actually write the check for in this case. Then on top of that, we're going to have Social Security and Medicare for the employer side, which is, in essence, you can think of it as matching. So we're going to have the same Social Security amount here and the same Medicare amount there. And so those are going to be those two. Now we'll do the same thing for Erica. We got the 800 earned here. Social Security, once again, would typically be that number times some fixed percent because it's a flat tax, 6.2%. We're just going to put the number in, 49. And then Medicare is going to be that number times some flat tax, like 1.45. We're just going to put the number of 11, though. And then the income tax would be that number, and then some complicated thing, which would be what's their marital status, how many exemptions do they have, and what's our pay period type, and look at the table and figure out how much it would be. And that's going to be 110. And then we're going to have the net pay, which once again will be this. The net pay will be 800 minus 49 minus 11 minus 110, giving us 630. Let's do that here. Equals this number. And this time I'm going to use a sum function in the middle here to sum these three up. So I'm going to say minus the sum of these. So, and then I'm just going to close that. Now, if that's a little complicated, the math is just going to be this minus this minus this minus this minus this. I do recommend learning the formulas for adding and subtracting, but if you just put the 630, that'll work too. And then we're going to say that the Social Security is going to be matched. Social Security is that, and the Medicare is just that. And then we're just going to add these up. We're going to sum these up. I'm just going to sum these and enter. I'm going to sum these and enter, sum these and enter. So I'm just eating sum and then highlighting. Now you might be saying, hey, I can use an autofill format for that. So just note, all I'm doing is adding all these across. I'm going to delete these and just show the autofill. If I click on here and you put your cursor right on that square, so it looks like that, not like that, but like that, not like that, but like that, and then hold down the left click and drag over, it will, in essence, just copy and paste the formula. And then you always want to just double click on it and say, is that doing what we think it should? It's summing up those two cells, looks right. So that's what we want it to do. So that's what we have here. Now, this will give us basically the total, and we can do a journal entry in a couple different ways. If we looked into Excel, it's going to do, in essence, a journal entry for each of these employees, meaning it's going to debit the expense here, payroll expense, and then it's going to credit the cash, and then credit the payroll payable, or the payroll taxes payable, for these three items for Adam, and then do the same thing for Erica. If we were just to do this with journal entries, and we had the backup of this ledger, we could do this with one journal entry. For example, if an outside payroll company did the payroll and said, hey, this is what we have, and here's the ledger, we could put this in place with just one transaction. So you need to kind of decide, do we want to put this in employee by employee, or do we want to put it in with one transaction? And we'll go ahead and record the two transactions for Adam and Erica. That'll help us to tie out the net pay, the pay check, when we do our bank reconciliation. So we're going to go back over here, and we're going to say that we had our payroll expense was debited, and the checking account is going to go down. So when we look at this, we're going to take Adam first. The net pay was 4583. So that's going to be the debit 4583. But the checking account is only going to go down by the net check, which is the 3539. So the credit is only going to be a credit for 3539. And then we have this difference that we're going to need, which will be the difference between those two. And that's going to be the sum of these items: Social Security, Medicare, and income taxes payable. And that's going to be added. If we add those up, that adds up to 1,044. And that's going to be the difference. So this is going to be a credit of 1044. So if we highlight all of these, then it adds up to 0. And this is going to be something like payroll taxes payable. It'll be a liability. We owe it now to the government. I'm going to highlight these two. We're going to go to the Home tab, Alignment, Increase, and Dent. And then we'll do the same thing. I'm just going to copy these and put them down here. And we'll do the same thing for the second employee. I'll highlight these two, Home tab, Alignment, and Indent. Second employee got gross pay of 800. So we'll put the 800 here. But they're only going to get 630 after we pull out Social Security, Medicare, and income taxes. So we're going to put the 630 here, credit 630. The difference then is what we removed from the paycheck, which is 170. So that's going to be a credit of 170. And that's what we have. We highlight that, that adds up to 0. So those are going to be the two checks that we went out. This is what's happened to the payroll. This is the payroll expense, because really all of that 800 is theirs. Even though we took 170, what we're going to do is not keep that 170, but pay it for them, for the employee, to the government to satisfy their responsibility to pay that. So, and then we're going to go over here. We still have, however, the employer taxes. And when we talk about payroll taxes in terms of payroll tax expense, this is really the only payroll tax expense there is. These are not payroll tax expenses for the employer. They're payroll tax expenses for the employee. For the employer, they're all just part of wages. And this is what they earned. This is what we had to take from them and pay them for. All we're doing is a kind of a service for them, paying their own taxes. The payroll tax expense for the company is this, the employer's portion. Now, QuickBooks will typically just lump that into the same account. So instead of recording like I would recommend debiting payroll tax expense, they're just going to put it into payroll expenses. Debit payroll expenses. And so this is going to include both wages expenses and the payroll tax for the employer. So we'll scroll back up, and that's going to be these two. I'm just going to lump them together. All of these for both Adam and Erica add up to 307 and 77, or 384. So we'll scroll back down. This is going to be 384, and then we're going to credit, and it's going to go to payroll tax payable again. We owe that money to the government. So there's that. And so that's going to be our transaction for our payroll for these two employees. So you can see as we get more employees, as we add states, this gets very complex. No piece of it, no piece individually is all that complicated. But when you put all the pieces together, then it becomes complicated very quickly with all these information. So that's why if you have more than a few employees, it might be worthwhile to get a specialist that does just payroll for you. In any case, we will record this out. So I'm going to go back all the way back here, and we're just going to post this one by one, starting here. So we're going to post this, and maybe I'll just highlight this to not get confused on which one we're working at. So I'm going to go to the Home tab and make this one maybe green, just to show that that's where we're working right now. And the colors can actually help. So I'm just going to say payroll expenses right there. It's going to be way down here on the trial balance. It's going to be in the same location when we scroll over. So it's assets, liabilities, equity, income, and expense. Scrolling over to the payroll expense, we're scrolling over. There's assets, there's liabilities, there's the income statement. We're looking for payroll expense. Here it is. So let's see if we can put them on the same screen. All right, so we're on BS 15, equals, and we're going to point to this cell in R29. That'll make this account go up in the debit direction to that 4583. Scrolling back over, we should see that same 4583 down here, 4583. We're out of balance by 4583, and our loss has gone up, meaning our expenses are greater than our revenue by 4583. The debits on the income statement are greater than the credits by 4583. Then we're going to record the payroll taxes, and that's going to be up here. So payroll taxes, and they put it in payroll liability. So I'm going to reissue this name to match, just to make sure we're on the same page. So I'm just going to copy this. I'm going to put that there. Instead of calling it payroll tax payable, I'm going to say payroll liability. I'm going to do the same down here. So instead of payroll taxes payable, I'm going to right click and put the same payroll liability, and right here payroll taxes payable, right click and put payroll liability. So then we'll find that. I'm going to say payroll liability is right here, right in the middle of the orange account. So we're going to scroll to the right. We have assets, we have liabilities, and then we have the payroll liability. So we want to be right here in the credit side in BD16, and we're going to say that that equals, point to this 1044, bringing that balance up to 1044. That found on the general ledger, also found on the trial balance, 1044. We then have the checking account, which is going to be decreasing. So there's the checking account. Here's the checking account, first account on the trial balance, therefore first account on the general ledger. We're going to be over here in AN24 and say that that equals, and point to this 3,539, bringing that balance down from 98,606 to 9567. That also found on the trial balance, 9567. So that's going to be this first one. I'm going to make it blue again and say we have done that one. Then we're going to make this one green. I'm just going to highlight this, right click, and make it green. We can also find that if you're on a different computer up here in the colors. We'll then record this same thing. So here's the payroll expense, which is way down here. So it's going to be way on the right hand side of our general ledger. So I'm scrolling all the way to the right till we see these blue accounts, and we're looking for the payroll tax expense, or payroll expense, I should say. There it is, payroll expense. So we're going to say, I'm going to scroll down just a bit. We can't quite see them on the same screen. I'm going to have to scroll down a little bit. So I'll scroll over this way. This is payroll tax expense. We are in BS16 equals. I'm just going to scroll down a bit and get that 800 and enter. So you could just type in there if you're in the same cells, equals R33 as well. That puts the balance at 5,383. Scrolling all the way back to the trial balance, and I scroll down, we see that 5,833. We're out of balance by 800, and that brought down net income, meaning the net loss is going up. This is a loss, meaning that the revenue is less than the expenses. We then have the payroll liability, 170. Here's the payroll liability. It will be in the same order on the general ledger. Scrolling to the right, there's the payroll liability right there. I'm going to scroll over a bit more. It's in BD17. BD17. We're going to say that that equals, right here in BD17 equals, scrolling down to that 170, enter, brings the balance up to 1,217. The 1,217 should also be able to be found on the trial balance. If we scroll back over, there's the 1,217. We are out of balance by the 630 until we record the last piece, the 630. That to the checking account. Scrolling up, here's the checking account, first account on the trial balance, first account on the general ledger. We are in AN, cell AN25, which equals, pointing to this 630, brings this balance down from 95,067 to 94,437. That then also found on the trial balance, 94,437. Scrolling back down, we're going to do the one last transaction. I'm going to highlight these, right click, and make this blue again. Going back to blue. And note here also, if you don't have that option for blue, you could go here, right click, and select this, and you get this color wheel. And I'm picking this light blue. It's like right next to the totally white area. And also, if that's a problem too, you could just like highlight the cells up here, home tab, and use the paintbrush, and that'll brush the same paints down. So those are two ways you can work that. And then we'll highlight these and right click. I'm going to make this one green because it's the last one we are on. We've got payroll expenses, so that's going to be here once again. Payroll expenses all the way at the bottom, therefore all the way to the right of the general ledger. We're looking for those dark blue accounts, payroll expenses. We scroll back over. We see payroll expenses there. So I'm going to scroll over a little bit more so we can be side by side. We will have to scroll down a bit. We're in cell BS 17. If we scroll down just a bit, we see this amount, which is the 384. So I'm going to scroll up. We're here, equals. We're going to point to this 384 and enter. And that'll bring the balance up to 5767. Scrolling all the way back over, we should see that 5767. Also over here on the trial balance, scrolling down. There it is, 5767. Then we're going to record the liability. Here's the liability. Here it is there. We're going to record that same amount on the general ledger. Scrolling to the right, it's in order, assets, and then liabilities, payroll liability. In cell BD 18, scrolling down just a bit so we can see it all in one area. We're in BD 18 equals, scrolling down, that 384, enter. And there we go, it brings the balance up to 1,598. That then should be found on the trial balance. There's the 1,598, and we are back in balance here. Net income then affected heavily by those wages going down to a loss, meaning the revenue minus the expenses, the debits over the revenue, by a loss then of 6,522. So then we'll just highlight these. I'm going to make this blue again. I'm going to remove the freeze panes. So we'll go up to the top. We'll go into the View tab and Freeze Panes and remove that. And then I'm just going to see what happened to the financials. So I'm going to put my cursor on the checking account and just point over to the financials. You don't have to do this, but this will just show what we've done here. So that went to the financials. We've adjusted to the payroll liability, and we adjusted the payroll expense. So let's go over to the financials, which should be done automatically. They should be automated and still be in balance and all that good stuff. So we're going to go to the right and see if that is indeed the case. So here's cash has been adjusted, payroll liability adjusted, the total assets still equal liabilities plus equity. Net income was affected. We have a big increase in the payroll expense, bringing our loss up to 6,522. That also found on the statement of equity, part of the calculation to get the ending equity of 143,875. That then found as well on the balance sheet 143,875.